an index and can thus become a future. In no time, you'll be trading how ubiquitous moleskin is in society. You'll be trading freaking Nebraska moleskin references against Illinois moleskin references against California and New York and everything. How relevant moleskin is to society. We're going to index it and then we're going to futurize it, and you'll be trading it very soon.
Such an interesting word. It can mean so many things.
It's funny because
we're talking notebooks.
This is truly one of those instances where I don't know that word by any other context but notebook. But yeah, if I was an alien and I came down here and I knew about like moles and I knew about skins and I knew about a handful of other things, and you said that word to me, I would not think notebook. That's for sure. So I totally got you there. Let's get to it though, because you keep trying to sidetrack us by calling me a weirdo, but then you're the one talking about lotion. I don't get it. It doesn't really add up.
That is out of context, especially when the video gets cut.
Yeah, that's right. This is going to make it into the cut now. What we are talking about today and what will add up is getting paid when you're right. Seems like a simple enough thing, but something that a lot of people find, especially as they start to journey through derivatives, Jermal, it's not necessarily that easy. If you overlook it, you're trying to get something done in the marketplace. This week, one of the biggest down weeks for equities in recent memory. And if you got short, but you didn't think about the conduit, the vehicle for your getting short, you might not be getting paid as much as you thought.
Yeah. It has been an interesting week. A lot of this has been, people have been waiting on this for a while. There is that talk out there how we haven't had a 5% down day. And I think something I saw recently says over about 196 days. So it's been a while since we've had a meaningful pullback in the markets. And, if you were on top of this ahead of time, you probably looked to get short a little bit, which is, kind of what we Pete and I talked about the other day. We're going to comment a little more, but the ability to pay when you get right, you're right. It's not as easy as it seems. It's really not.
Yeah, you really have to be careful. Like once you start getting creative, you start using call option, put option, futures on stock indexes, futures on different commodities, all the spread trades and all this different stuff. The more creative you get, if you don't make sure that you tick those boxes on order entry, you could be losing out on profits even when you're right. And that's like one of the top 10 worst feelings in the world. Because like if I sold the stock market and the stock market moved a little bit higher and I lost money, it's like, yeah, I was wrong and I can get out and that's just a loser. I move on. But if I sold the stock market and I tried to short stock here, in my position that's speculating on the fall in equity prices, Jermal, isn't paying me, then I'm like, first of all, I'm peeved because I'm right and I'm not getting paid like I'm right. And second of all, it's like I have to investigate what the heck is going on. And this is when a lot of times people who use options, they start to be like, well, is it volatility or is it theta that's going against me? What is getting in the way of me and getting paid to be right? You and Pete talked about shorting stock and you talked about, the different ways to do so and the different costs. And maybe you can quickly speak to this idea of like, if I wanted to sell $7,500 worth of stock using stock and ETF products, it's going to be a bigger price tag than futures, right?
Yeah, I mean, it's pretty expensive. And I was saying this, I don't really remember many times in my own personal portfolio that I just outright sold stock, got short. I just looked for other ways, obviously, with options to do it. I mean, that was one of the biggest things that got me interested in options, the ability to trade all those different directions, up, down, sideways, et cetera. But there are times that you're interested in just, getting short something because, like I said, although you have all these opportunities with options, I think one of the main times you're looking to get short, at least for me, one of the main times I'm looking to get short something is when something's had such a big run to the upside. Yeah. And it's like, okay, I'm looking for some mean reversion on a pullback here. Usually at those times, I'm not looking for, I guess a small way to do it in that getting short calls, which is limited, if you will. I'm usually looking for like a long put situation. And that was my main go-to for many years. But as you said, there's so many other things you got to think about when you do that. You got to think about the volatility component, all those type of things. So the ability to just sell something as far as, with futures, it appeals to me. And that's one of the main reasons I was like, hey guys, teach me more about this, because short stock is expensive. I mean, if you're able to do it, you might have a situation where something's hard to borrow. That's a whole nother story, right? So this is where it lies as far as being able to get short small stocks right now. And that those have actually dropped meaningfully this week. We've seen it.
Yeah, absolutely. And it's funny. I don't know if it is the cost or a lot of people historically who, guess what, are long certain stocks come out and they say, oh, it's unpatriotic to short stocks or what have you, all of that stuff that you hear talking from talking heads. I don't know which of these items it is, but there is something that like selling stock short is like gross. Like no one really wants to do it. And maybe it is the hard to borrow thing as well, where like a handful of these stocks, especially relevant ones in today's world, like AMC or GME and some of these other ones are hard to borrow. And the last thing, so now what, you want me to pay like an interest rate on this borrowed stock that I'm going to sell short? It's 2021. Like I should be able to go in, I should be able to think that this stock market is going to go lower and sell it at an efficient rate and not have to pay anyone basis points to do so. Absolutely ridiculous. But it's a theme of this show, Jermal, where people jump from a simple idea of like, I think the stock market has run too high, and it's not unpatriotic or whatever. It's just like, the thing is up 30% this year, and it was up 30% last year, and it's on a run where it's been up hundreds of percentage points for the last couple of years. I don't think that's sustainable. I think it's going to come back a little bit. And they're willing to jump through hoops to learn about selling calls, to learn about buying puts, when futures do it at an already more efficient rate, and it's right in front. All I do is sell it. And then if it goes down, I win. If it goes up, I lose, and I get paid if I'm right. But maybe you can speak to a couple of these notes in the short call, which has its time and place. Like, this isn't a show where it's like, forget about options, they stink, move on to futures. But there are some problems with the short call and with the long put. Am I right, my friend?
No, absolutely. I mean, I think you have laid out well here. The idea of short calls and long puts, they do have their flaws. We just touched on this a little bit. When you're talking about short calls, it's limited profit, right? Like it's basically just the amount of premium that you're collecting right then and there. And that's the most that you're going to make on that situation. And, there's the idea of diminishing exposure as well. Long puts, even more so. I mean, that long premium, which we talk about across all the networks, the idea of paying for something and wanting it to fall below the strike by the amount that you paid, there's a low probability there that it's going to continue to fall and stay down. And a lot of times that premium can be expensive. Now, they do have their time and place, right? Oddly enough, as a former professional trader, these are the times that you're starting to look at getting long puts because we've been so weak recently. All the news is starting to turn negative for the most part, whether it's about, the current the current health crisis that we're still dealing with, or if it's about, other stuff that's happening overseas or whatever, or just different things that we've seen in macro data recently. We've seen pullbacks in a lot of macro data. So these are the times you start to look to get long puts, even though vol has ticked up a little bit and those puts might be expensive, but those are the times you look at possibly doing it because it might pay for itself more than anything. But these are the flaws that you have to deal with those options. These are the things you always have to constantly think about when you have these option positions on. And like you said, they work out well in their time and place. Short call mostly probably works out well if you're long some stock and you want to just get a little bit of protection to the downside as you're enduring a move. So it just all depends on your point of view.
Yeah, you're absolutely right. Like they have fantastic use cases, like especially if you're long stock and you want to sell that call, great use case for that. It's a little bit of a hedge. And if the stock moves higher, I still make money. If it stays right here, I'm making money. That's fantastic. If I'm long stock and I want to buy a put, maybe I bought a stock at 100, it went to 200, and I can pay 50 cents to buy the 100 put to make sure that I never take a loss on that position. Like, great. awesome. Really cool ideas there. And they also, if you're trying to get creative, like, a stock like Tesla is up big, and I think it's going to reverse, but it might not. It might move higher before it moves lower. The short call is great there, but the problem becomes when it's like the stock market's overextended, or even intraday, like the stock market's up 1% or 2%, or the stock market's down 1% and it's bounced back, and I think it's going to move lower. That's when some of these option strategies can get really complex. Like that's when I want to come in and I want to sell the future. And if the stock moves lower, I'm paid for every single tick.
Yeah, that's true.
If I sold that call and the stock market moves lower by 5%, volatility might cancel out all of my gains, which is frustrating. Or if I sold that call and the stock market sinks by 10%, and I only get paid like the $1 or $2, but it's moved $20 lower, that's really frustrating there. Not to mention that when I have a portfolio and I'm trying to keep short deltas going because I have some other stuff that I'm trying to hedge, or it's just part of my core position. You see this all the time, especially with other personalities in the options world, which is you go from short delta to neutral to positive delta very quickly when you're only in the world of options. Like it's a great creative place, but those short deltas evaporate very quickly. And if you wanted to keep them going, futures are truly the best place for it, because you sell, it seems like simple. And once again, it is this theme of like, we're bringing people from options to futures, but they almost like, it's like a map where you were here, futures were here, and you jumped all the way up to options, and now we're bringing you back. Because it's simple. It's like I short the equity index futures like small stocks. It moves lower and I get paid.
Straightforward. I mean, I can't lie. It was like full stop. See, you just did it. It's true, man. I mean, again, all these things that we had to think of when it comes to either shorting stock, the idea of, can I short, how much do I have to pay to short it or whatever, which also kind of is ironic in a way. And if there's a lot of times where some of the names that have made some parabolic moves where you do want to get short, again, like we said, could be hard to borrow. And that's, that sucks. It's not like you can't even really trade it in that way then. Right. And, again, like you said, it's not like we're poo-pooing the idea of different options. They all present their use cases. But the idea of just being long those puts, you got to pay attention to Delta. You got to pay attention to Theta. You got to pay attention to Vega versus, you can just get short small stocks here and get paid as it goes lower, assuming it goes lower, of course. I mean, we don't, you never know. But that's all you have to think about is your Delta, and that's it.
Sometimes I listen, I love a nice, 10-course meal. You sit down, you get a little of that. There's some wine pairings and all this stuff going on. I love keeping track of all the Greeks in options trading. But every once in a while, markets are not every once in a while, every day markets are moving. And sometimes I need to get my short equity exposure, or I need to get my longs, or I need to get long crude oil or short US dollar or whatever. And I just need a hot dog and then to get the heck out of here. Like, and futures truly are that hot dog, or like that kind bar that just like, it does what it's supposed to do. And then you get on with your day. And there's no scenario where like I sold the thing, it moved lower and I didn't get paid, because that's the worst feeling. And sometimes those most creative strategies with options can really do you a disservice with that. But Jermal,
yeah, I mean, sometimes you just need a notebook. You don't need a notebook that has some wraps around. You just need a regular notebook. And this is getting short futures is that notebook, right? You're right. I see.
Option strategies truly are the moleskin of notebooks, I guess, right? Is that what we would say?
Yeah, I agree with that. I would agree.
I like it. I love it. See, I got the food analogy going. You got the notebook analogy going. Always great stuff here on The Leap. Jermal, thanks so much for joining us. We are going to blast off like your friend on your t-shirt into the next segment. Splash into Futures is coming up next. Thanks, everybody, for watching. Thanks, Jermal, for being here.